The recession is coming, Europe is collapsing.
China is planning to take over Taiwan. The president of Venezuela was kidnapped by Delta forces. US is taking over Canada, Greenland, Cuba. Trump is imposing tariffs.
There are protests in Iran and upcoming Middle East war.
AI bubble is going to burst. Crypto markets are dead with the huge liquidations. And of course, we're in a bear market by a 4-year cycle. And
It's a fugazi, it's a wazi, it's a woozy, it's a fairy dust. It doesn't
in
exist.
reality,
It's never
you
like-
may be thinking that it's not a good time to invest. But in mine, I'm looking at numbers, history, and of course, let me use my brilliant brain to explore this topic on a completely different level. And a new perspective for you as well. Subscribe and like this video and I will show you how deep the rabbit hole it goes. First of all, what you need to understand is the dollar has been printing from a thin air. The purchasing power of dollar has fallen over the century, especially after 1971 when President Richard Nixon closed the gold window, severing the final link between gold and the US dollar.
To suspend temporarily the convertibility of the dollar into gold or other reserve assets.
Let's check it out something interesting. What's usually happening during and after crisis with the money supply? 1970s. Oil crisis leading to the stagnation. Money supply has increased. Early 1990s. Saving and a loan crisis in US. Recession in several countries. Money supply has increased. 2000 and 2001 dot-com bubble is burst. Money supply has increased. 2008 global financial crisis triggered by US subprime mortgage crisis. What a surprise with the money supply? It's increased. 2019 COVID pandemic. Money supply has dramatically increased. And what's going to happen in the future? Why is this time to be any different with the money supply? Okay, let's check it out something with intrinsic value, such as gold or silver. And today I won't be breaking your little hearts with the housing prices. The prices of these assets skyrocketed against the dollar. You will ask why or what I'm trying to say. Wake up! Fiat by nature was created to steal from you. It's a matter of fact. Just take a look what's happening with the dollar purchasing power. It's completely planned. Okay, but let's be honest, probably you won't be able to make it millions by buying small piece of gold or silver. But I'm completely agree that's a better idea than any fiat currency by definition. Let's skip straight away the stock market because of the low returns with a smaller capital, and it's a fake as a fiat. Except if you have the insider information, would be nice to share with me as well. I would really appreciate that. But of course, all jokes aside, it's a great indicator for us. I will make it very clear, as higher returns, as higher risk. So don't be a tart and naively believe someone who sits in a suit in front of the wooden door and barely speak English. So do your own research, please. Finally, we're getting to something incredible. Listen and watch carefully. September 18, 1873, the biggest bank in America, J. Cook and Company, completely collapsed and sparked a nationwide panic. And caught right in the middle of the chaos was a farmer named Samuel Benner. But instead of giving up, he studied the chaos, found repeating patterns, and in 1875 published a cycle guide that told you exactly when to buy, when to sell. And his forecasts still line up with the history, from the Great Depression to COVID. Pretty wild for something cooked up by 19th century farmer. Here is another example. Economist Fred Harrison used this 18-year cycle model to accurately predict the property crashes of 1919 and 2008. Obviously, these charts aren't meant to predict exact years. Well, sometimes they land right on them, but they give you perspective on where we are in cycle. So here's how the money flow really works. When the things get shaky, cash rushes into gold and silver first. They're like a safety bunkers of investing world. Not to get rich overnight. Once the metal have had their momentum and the growth slows down, that money starts looking for the next move, and that when it rotates. So here is a correlation between real gold and a digital gold as a Bitcoin. Golden often moves first, and during correction on a gold means up for Bitcoin. Here is to be specific. In 2011, gold is reaching all-time high and going into correction. What we see on a Bitcoin is a huge movement up. Same story happening in 2020. Gold is reaching all-time high and going into correction. And what we see on a Bitcoin is a huge growth from 5,000 up until 69,000. Same story happening right now. Gold is in a parabolic mode and probably will go to correction. And what we will see on a Bitcoin, it's pretty interesting.
Let's see the correlation between silver and a Bitcoin.
Silver is on the left, Bitcoin on the right. I won't be explaining you all the resistance and all this just take a look. They're quite familiar with each other.
So here's the deal with the gold and copper. They basically telling you completely different stories about the economy. Let's say gold is all about protecting what you already have, safe and steady. Copper is completely opposite. It's industrialized metals, the stuff they use to build stuff. When factories are humming and construction is booming, copper demand goes up. But here's the part that actually matters. Basically, which one is doing better, it tells you where the economy is headed. When a copper starts climbing faster than a gold, it's a sign things are heating up, expansion mode. And when its economy expanding, that's when its risky assets have their momentum. Stocks, Bitcoin, crypto, all of it.
Here we go, I'm back with my boring charts. At the top you have copper and a gold, the white chart. At the bottom you have blue chart with a Bitcoin. So 2011, copper is going faster than a gold. Bitcoin is rising. Same story happening in 2016. Copper is going faster than a gold, Bitcoin is rising. Same story happening in 2020. Copper is skyrocketing, the gold is going up as well. The digital gold, Bitcoin. And what we will expect in the 2026, maybe not right now, but in the future, the copper will go a bit faster than a gold. And for Bitcoin, it's a good sign.
The SMI Purchasing Manager Index, or PMI, is a key measurement where the economy is headed. If it's above 50, economy is expanding. Below, it contracting. So it's not just an economic number, it's a cycle indicator that's lining up with the crypto history more than once.
Okay, ladies and gentlemen, let me prove my point as well. So, for example, 2012, we see PMI index is above 50, Bitcoin is rising as well, here we are. Same story happening in 2016, PMI index is above 50, but the Bitcoin is rising. Same story happening in 2020, PMI index is going crazy up. Same story happening on a Bitcoin, it's a bit logarithmic chart, so you can see differently. The Bitcoin is rising. And of course, right now, what's happening in 2026, PMI index is above 50, and what we will see on Bitcoin is a bit rhetorical question.
The Russell 2000 tracks the small cap stocks. Think of them as the shitcoins of US stock market. And here is a pattern. When the Russell 2000 starts hitting new all-time highs, it's a signal. Investors are feeling confident. They're willing to take risk, and historically, that's exactly when altcoin going nuts. But here is the catch. It's not instant. After the Russell breaks its record, it can take almost a year for altcoins to peak.
Okay, what I mean by all of that, for example, 2016, Russell 2000 is breaking resistance level and we're going up. For almost a year, we don't see any movement on altcoins. But again, when we get into discovery zone, there is a huge altcoin season. Let's see what's happening during 2020. Russell 2000 breaking even resistance level, and what we see on altcoins, it's pumping. There is a huge... People are buying NFTs, all the crap, the altcoins is going wild. It was crazy alt season. Same story happening right now, 2026, 2025, I would say. We're breaking the resistance level on a Russell, and what we didn't see yet, it's a massive growth on a cryptocurrency yet, which is quite unusual.
So, basically, Bitcoin stops soaking up all the money, and that cash starts flowing into riskier stuff, such as altcoins. Looking for bigger returns. It's like a waterfall. First, money moves from Bitcoin into Ethereum, then from Ethereum into smaller altcoins, aka shitcoins. That's a rotation. And when you see the domination is falling, it's a signal of the altcoin season. Bitcoin domination is going down, altcoins is rising. Bitcoin domination is going down again, the altcoins is rising. Same story happening right now. Bitcoin domination is slowly going down, but we haven't seen any movement yet on altcoins. But let me open just another chart, which is quite interesting as well. This we looking at others, aka altcoins against the Bitcoin. Usually we forming at a trend line, and whenever we breaking even the trend line, it means altcoin season. So it's happened in 2016, happened again in 2020, and didn't happen yet in 2026. Over 1,500 days. That's how long altcoins have been squeezing against the Bitcoin. Think about that, years of just building pressure. As spring compresses, the longer you hold it, the harder it's going. Let's back to something really interesting. Crypto fear and a greed index is an extreme fear at the moment. Think of the tourists as the weak hands. They show it up holding for a quick lottery ticket. Right now, over 95% of them are sitting on unrealized losses. Bought on high, got scared, and now they're selling at a loss. I'm not saying buy all the alternative coins and start rapidly googling which coin is the best to buy or other dumb shit. I'm just offering you a perspective. What if dollar continues to depreciate? What if we got crypto pro president?
Financing, I'm also working to ensure America remains the crypto capital of the world.
What if larger institutions are
industry
buying?
Happening today, really happened yesterday. 11 Bitcoin ETFs, though, set to begin trading in just about 2 hours from now.
What if tokenization of all assets and mass adoption happens?
You know, I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities to bonds across the board.
Oh, it's already happening. I hope you found this video interesting and helpful. If you like this video, please like and subscribe and share this content to someone.